Welcome back, and joining me for a closer look at what's played out on the market scene today is Nick Kunze from Sanlam Private Wealth. Thank you so much for your time, Nick. Quite interesting moves that we're seeing, particularly in the U.S. markets, because they actually had very, very strong gains for about 9 consecutive days. But today, seeming that they are taking a breather. What's your reading, and particularly after the U.S. non-farm payrolls that we got on Friday?
Yeah, good evening, and thanks for having me on. Good evening to the viewers. Yeah, solid, as you said in your intro, really sort of solid finish to the week. You couldn't have asked for more. The last time it did this was, in fact, 2005, so that's 20 years ago. European markets were pretty much the same as well. So really solid. We've now made back, those who keep a keen eye on it, we are now above that pre-liberation day that Donald Trump spoke about. We've made back all those losses. We're back in the green, and yeah, this volatility continues. But obviously a big week this week with the Fed, so plenty going on, plenty to digest for all us traders.
It's quite interesting because last week there was a lot of concern on alarm bells ringing on a U.S. recession after the contraction we had in the first quarter. But did the non-farm payrolls maybe instill some sort of confidence in that economy, in particularly the labor market?
I think certainly it did. I mean, 4.2% unemployment. I mean, that is effectively full employment in the American definition. And yes, the jobs numbers came in a little bit better than expected. And in fact, March numbers revised better as well. So all in all, pretty positive for Mr. Powell, positive for the economy. Although Mr. Trump was tweeting about cutting rates after that number, which baffles the mind anyway. But yeah, I think just in general, I mean, the American administration, I think Mr. Powell, I mean, as MPC, they must look at that number and actually get a lot of confidence out of it because employment's still ticking on quite nicely. Yes, I mean, if you had to focus now back on the GDP print, obviously a negative print, not great. But after the market sort of dissected it, we thought about it, they looked at numbers, a lot of moving parts in that. And in fact, a lot of front loading that was done by a lot of companies ahead of the incoming tariffs, and that did skew things a little bit. So, I mean, all in all, the US economy, even though it is slowing, and I think there's possibly a recession at some point this year, first and foremost, it just looks, steady as you go for now.
Yeah, it's quite interesting that you say that the S&P 500 is back above pre-liberation day, and actually over the weekend at the Berkshire Hathaway, the Coachella of the finance world, they call it the Woodstock of capitalists. We did have veteran investor Warren Buffett actually saying that the market turbulence was just a blip. Anything that you took out of that shareholder meeting? I do also understand that they posted their quarterly results, which actually showed a decline.
Oh, so, I mean, everyone, in our game, we talk our books. I think Mr. Buffett, even at his 94 years old, also probably talks his book as well. I mean, my question to him, if I was sitting at that conference, would be then, why are you sitting at $350 billion of cash if everything looks so rosy? So sometimes there is more to the story. Yeah, I mean, on the scheme of things, if you're a 10, 20, 30-year investor, or however long it is, or 50 years if you are, or 60 years if you are a Berkshire Hathaway investor since Mr. Buffett formed the company, yeah, it is just a blip. But for those of us who maybe have a shorter time frame, I do think there's still a lot of risk lying ahead. And again, I refer back to one of the world's greatest investors sitting on almost a third of $1 trillion in cash, and he's sitting on that for a reason.
Yeah, and this is actually quite interesting because that share price is down quite significantly, but maybe not that much, looking at the fact that even with the market turbulence, Berkshire Hathaway was actually outperforming the markets. When everything was down, it was up. Well, let's take a look at some of the company news that came out of the JSE today. Goldfields are finally entering into a buyout agreement with Gold Road Resources, so they will be acquiring that asset. And it was actually quite interesting. I don't know how it ended, but I actually saw that there was a rise in the Goldfields share price, even though it is the acquirer. Are shareholders happy about this deal?
I think it's been, I guess the rumor mills have been working overtime, so it was sort of the news sort of semi broke on Friday. I think with gold, certainly with gold miners, a lot of long-term investors get a little bit nervous whenever the miners get the checkbooks out because they haven't always had a great reputation for being good allocators of capital. Although I do think the last year or two things are slightly different. They've been a lot more cautious, which does bring comfort to most of us. I don't think it's a bad deal at all. Look, I mean, the gold price where it is, and something like Harmonies, which is unhedged, their free cash flow I mean, they are printing money at these levels, provided gold price stays where it is. I don't think it's a too bad a deal. It's not a huge chunk of change for them either. And if you look at that asset they are purchasing in Australia, the Greenfield, it is sitting on a very large untapped deposit. So interesting enough, as you said, I mean, earlier on this morning, the Goldfields share price was actually down, and then it did reverse quite nicely into the close.
Yeah, and we see that, that closing climbing about 6%. Well, a counter that was on the other side of the spectrum, I think in morning trade it was down about 7%. Astral Foods, they came out with a further trading update saying that they expect their bottom line to decline by as much as 60%. Are things looking worse than had been expected?
Yeah, clearly it was. I mean, you said share price initial reaction down. I always like judging the first move in the price, although I noticed by the close it had come back almost to unchanged at one point. Yeah, and also a little bit baffling because there wasn't too much detail. They did reference frozen food prices. Those margins getting decreasing. They wasn't as good as they thought. Food prices also not helping, coming out of a drought last year as well. So a lot of headwinds for the business. They have guided recently, but they don't seem to be out the woods just yet. They are reporting, I think, in a couple of weeks' time. But initially, it doesn't. Long-term shareholders, there's not much green. There's not much sort of light into this tunnel, not for now anyway.
Well, let's fly on out of here. What is your stock pick for today, Nick?
Sticking local for a change, going with Glencore, sticking with the miners. Glencore, though, came up with a trading update last week. The guidance wasn't great. The market took a bit of a knock, although long-term guidance still maintained. They're going to need to pick the speed up a little bit in the second half to make it up. But like the copper aspect to it, we've had a lot of reports the last sort of 2 weeks about a copper deficit going into 2026. And a lot of companies stockpiling copper. A lot of the Chinese warehouses apparently too. Glencore, 20% roughly of their basket is in copper. So if you're prepared to take a little bit of knock on the other side of it, which is the thermal coal prices, copper certainly looks a lot brighter. Current levels around about 60 Rand a share. It's certainly got a lot more upside than sitting around these levels.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today, Nick. That was Nick Kunze from Sanlam Private Wealth.